it's built around the local regulatory environment, the local consumer financial behavior. So I've actually been investing globally in fintech for quite some time. And I think what got me comfortable with that was earliest investments was leading a Series A in Chime in 2016.
Welcome to the Smart Venture Podcast. We're here to bring you the latest and greatest from the Silicon Valley, where unicorns roam and innovation never sleeps. We've got top investors, superstar founders, and well-known tech executives lined up to share their secrets on building and investing in successful companies. Just a quick disclaimer, while we may sound like financial geniuses, but please don't mistake us for your friendly neighborhood financial advisors. So let's get started and dive into the wild world of tech entrepreneurship. Great news for all our Smart Venture Podcast listeners. I've been hosting a new daily live show, Venture with Grace, on LinkedIn Live at 9 a.m. PT every weekday. Follow me, Grace Gone, on LinkedIn to catch up on past episodes and stay updated with future ones. You will get insights from key industry players and have the chance to ask questions live. Don't forget to subscribe to the show on Apple Podcasts, Spotify, and our YouTube channel under the Live button. Join me on this journey and let's explore the world of innovation and investment together. Hi, Lauren. Welcome to Smart Venture Podcast.
Hey, Grace, thanks for having me.
Okay, so to start the show, I would love for the audience to learn more about you. So you have worked at the Clinton Foundation, and then later on you work at Google, and then before you guys created Acrew Capital, you and some of your co-founders are all worked at Aspect Ventures. So why don't we start with what were some core lessons that you've learned early on in your career that kind of shaped you into who you are today?
Yeah, happy to. So I took a circuitous path to venture, but I would say I think a lot of folks in the industry have, and there's a through line that's pretty clear to me, but it's one that I think looking outside in, people are always like, "Huh, you work at the Clinton Foundation in India, and then at Google." So anyway, yeah, but my early career experiences certainly had a huge impact on how I think about my job today, and maybe taking them kind of in chronological order. So my first job out of college was with the Clinton Foundation, as you said. I was based in Delhi, and I was there initially to work on clean tech projects. And I think that the experience just taught me a lot about comfort with ambiguity. I was the first person for my team as a 22-year-old thrown on the ground there. I had to develop kind of a whole project plan in a place that I didn't know a whole lot about.
Mhm.
And then when the global financial crisis hit, the mandate for clean tech kind of dried up. So I had to sort of pivot and figure out sort of where to focus next. And so I think just that, that experience of having to be forced into just getting comfortable and being successful in navigating through uncertainty was really important for me early on. Around that same time, I was actually also asked to join the board of trustees at Brown University as a young alum. And that was a really formative experience for me. I think in a lot of ways, it was it taught me how to be a board member, right? I mean, I got to do this, fill this role for an organization that I love very early in my career, and was really lucky to get to do that. And I think, when I showed up there as a really young person and I was surrounded by CEOs of Fortune 500 companies and very seasoned investors, I had major imposter syndrome and couldn't quite figure out what I was there or what my role was supposed to be, or why I was there, what my role was supposed to be. But I think what I quickly realized was, I needed to kind of figure out how to find the intersection of my own strengths and experiences and the needs of the organization, and really lean in on one or two things that I could sort of be impactful around. And what I came to there was, it was 2009, the financial crisis was peaking, and a lot of my peers were having trouble in the job market, even coming out of Brown. And so I spent a lot of time on this sort of reinvention of their career services, which was super important to the university too, and ended up being something that I could be really impactful around. So I can keep going on Google and Aspect if you want, but those are a couple of my really career experiences and learning.
Totally. I wonder as you mentioned, you are a young leader, and then how do you be a board of trustee for a university? This is just like genuinely out of curiosity, because like obviously, whenever you think of a board member, you typically think about like, the people who have been at a company for over 30 years and then like, rising through the C level and, rarely seeing like people that are like young leaders on the board. And just out of curiosity on like, I guess like how could this, how do you kind of like got this kind of opportunity? And, what were some, as you mentioned, like, there's a lot of like learning lessons probably from with some other board members who are a little bit senior, and like just out of curiosity on what's your kind of like journey to get there, and then the kind of like lessons is.
Yeah, why the heck did Brown put me on the board as a 22 year
No,
old?
yo, I think that's amazing.
It's a good question. No, it's no, but it's totally fair. So basically, when I had graduated, the board did this governance review and sort of looked at sort of their how representative they were of the alumni population. And one of the areas that I think where there was a really significant gap
Mhm,
was recency of experience. And I think
mhm,
that the chancellor at the time, Tom Chish, was very progressive about this kind of stuff and decided that, they needed to get the sort of perspective of
mhm,
people that were more recent. And so I was
mhm,
the lucky guinea pig and was the first person to kind of fill this sort of role. And they've since kind of rolled it out more formally where they
mhm,
systematically bring young people
mhm,
uh, on their board. But that created a lot of pressure, as you can imagine, because I was
mhm,
the first one like this and no one quite knew what to do with me. And I didn't know quite what to do there. And I mentioned sort of where I ended up in terms of spending time, but I think one of the things that was, hugely helpful actually was that I had some people that were really kind of, took me under their wing and championed me. And one of those people was actually Teresa Gao, who's now my co-founder and co-managing partner at Acrew. So she was at Excel at the time, and that was actually the context in which we became quite close.
I wonder, so like speaking of like Teresa, like obviously I feel like and the board of advisor, like who is on your personal board of advisors when it comes to career development?
Yeah, I know you'd mentioned this question even before we started, and I've been thinking about it, and it's a tough question for me to answer because there are just so many people that have played a meaningful role in sort of supporting my career, and there's not a way to answer this comprehensively as you can imagine, and I would like happily take up two
Mhm,
podcast hours talking about all
mhm,
the people that have sort of been an important part of my life. But if I were to try to really boil it down, I think, and this is a bit of an oversimplification, but I guess there are kind of three buckets of people that I think about on my personal advisory board. So the first is like the people who have been kind of role models for me, that are in roles that I've sought in one way or another to emulate and learn from. So
mhm,
that's bucket one. There are the people who I've learned alongside. So, really the learning from working with or going through shared experiences together. And then I think third is that there are people who have sort of provided the compass for me for what matters. So I can give you some examples in each one. So in the first one, you mentioned Teresa. So yes, so people that like I've looked up to, Teresa is sort of the obvious and maybe most important
mhm,
answer, especially for those that know me professionally. She's, as I said, she's my co-founder and co-managing partner at Acrew, but she's been this long time friend and mentor who became my boss. And then,
mhm,
and then we evolved and now she's my co-founder. And I can't, there's probably not another single person from whom I've learned as much professionally as Teresa. I mean, there's no way. But there are other investors that I've looked up to, for my career, and I've been fortunate to work alongside and have played a meaningful role that I've sat on boards with and worked with people like Kirsten Green and Satya Patel and many others. And then in the second bucket of like people that I've learned alongside, I think a lot about sort of my peer networks in venture, people like Nikhil Basu-Trivedi from Footwork or Jake Saper at Emergence or Roseanne Winsek at Footwork. But these people have like really grown up in the industry with me and like have been, my cohort. And venture can be sort of this lonely solo job. And I've found that like people that seem to really succeed are the ones that sort of build out this community of other peers around them. And I've been lucky to have a lot of that. And
mhm,
then, of course, I've learned from my founders. I mean, very much so. There's too many to name, but certainly, my greatest learnings alongside others probably from my constellation of founders. And then in the last bucket, in terms of people that have provided a compass, I mean, I think about my mom is one example who's been kind of a moral compass. She's a founder herself of a nonprofit organization, and getting to see that has been really powerful inspiration for me, and my daughters, who, even though they're not on my personal board in the way that you would think, like a lot of my decisions are dictated by what I think is important for them. And so, yeah, I guess I think about it a little bit more holistically in terms of who are the people whose sort of influence guides the decisions that I've made, and that's kind of the sampling.
Yeah, I love that you also include your daughter just because obviously I feel like people really like people whenever people think about the personal board of advisors, it's always like, someone who is more experienced and like, peers than, people around you, like the family members. And obviously I feel like that's definitely something really interesting, but also like super true that like, the kids also gave you inspirations on different things. And I wonder what's one thing that you're constantly trying to improve or maybe, for some people it could be like soft skill like sales or like technical skill like coding. Is there like one thing that you're constantly working to get better at?
Yeah, it's a really good question. I mean, there are many things, as you might imagine, but I'm going to give you a short answer on this one. I think the most important thing is self-awareness, because I think without it, it's impossible to improve on anything else. And so I think that for me, that's always my number one, is just making sure that I understand my strengths, my shortcomings, and and that I'm kind of conscious of what are the things that I want to fill in and where might I sort of fill in by partnering with the right people.
For sure. Like, what would you edit as your personal unfair advantage?
My personal unfair advantage, I would say it comes down to building relationships. I think that we thought a lot about this when we founded Acrew, but and it's hard to synthesize this down into marketing terms, but like I think we really wanted to build a firm of people who could be trusted and authentic partners to each other and to our companies. And that means like no assholes. And it means being, really mindful of the values and the type of people that you want to be around. And so I think that, I've pride myself in having a good sense of evaluating people and of building sort of that community and culture around me of kind of a network that sort of brings in more like-minded people.
For sure. Okay, so jumping into an investing segment. Okay, you have invested in some leading companies in the fintech or just tech area in general. So like you have invested in Chime, Clara, Divvy, Gusto, Plaid, among other companies. And why don't we start with like, maybe you could pick one company out of the your amazing investments. Can you walk us through how you meet the founder, to how you evaluate the company, to how you do the diligence, and obviously your thesis driven, like, what were your thesis back then to help you having the conviction to invest in a company? And how do you think about like the exit strategy as well? Like, since like I feel like right now we're in the AI era, a lot of people's strategy was just to sell it to another company. But just out of curiosity on like your thought process on, evaluating a company and thinking about where they are and where they're going.
Yeah. So I figured maybe I'll talk about one of my most recent investments
Mhm.
because it's top of mind. So as I think I alluded to, I'm happy to sort of share more about what this means to me. But I think about myself as an investor whose approach is to sort of invest at the intersection of thesis and network.
Mhm.
And that's very true in the case of this company, Nala. So Nala is a cross-border payments company that largely focuses on the corridors between the US and Europe to Africa. And I had actually originally invested in this company, a small seed check back as my predecessor firm. And I had done so because Benji Fernandez, the co-founder and CEO, had come up through a very trusted person in my network as someone. He was actually a GSB student at the time, a very young one at that,
Mhm.
and it had this kind of prolific, very early career. He was a news anchor in Tanzania and had sort of become this mini influencer and just like sort of seemed larger than life for where he
Mhm.
was as far as age. And so I think there's just something very special about him. And he was interested in operating around sort of digital banking, which was something that I knew a lot about. And so
Mhm.
it was a founder bet. And then what
Mhm.
happened was in the interim period between when I made that first seed investment and then this recent investment as part of Acrew
Mhm.
was the company went through a lot. During COVID, they went through a major pivot, and I watched how Benji and his co-founders Nico sort of navigated through a bunch of uncertainty in this very agile way.
Mhm.
Uh, and I think, to your question about how I'm thinking about looking at companies right now, I would say agility of the founding team combined with a strong perspective about where
Mhm.
one wants to go, I think is kind of the number one thing that I'm looking for in founders, because I think if you're not adaptable, if you're not agile,
Mhm.
it's so hard to see around corners in this technology cycle. And so the important thing is to have a strong perspective of where you're going, but be willing to change and adapt quickly, because if you can't,
Mhm.
the market's going to change around you too quickly. And so I saw that in this team, because I saw them adapt when things got rough, and they did so quickly and successfully. And then concurrently, I was working on a major thesis exercise on cross-border payments. And there are lots of companies operating in that space, but it was clear to me that the space is still so broken and so expensive. And so I was looking fundamentally for new payment infrastructure. I was looking for business model innovation, and I was looking for an underserved demographic. And Nala had all three. So on the infrastructure side, they built deep into the local rails in Africa. They had partnerships with the local banking companies and really had that depth. On the business model side, while a lot of other cross-border payments companies monetize primarily on the transactions, Nala had this unique insight about monetizing on the currency exchange on FX, especially in markets that are starved for dollars. And this was, I
Mhm.
thought, really inventive. And then they were serving an underserved demographic, but a very large one. So, Africa is set to have, a third of the world's young people,
Mhm.
in this decade. And it was just a very fast growing young population of people who are more tech forward and who are, frankly, migrating a lot. And so it sort of all lined up from that perspective. And I had the great pleasure of leading their Series A last year, and the growth has just been fantastic. So it's been a
Mhm.
fun one to be a part of.
I wonder, how do you think about like the competitive landscape in a foreign country? Just because I think it's very different than Silicon Valley, maybe as you mentioned, like the GSP background or like some sort of like pedigree is like very, I think like in Silicon Valley is very highly valued. But I think like going to another different countries, like I feel like especially across the globe, it's like maybe there's a lot of different culture related things, or like you mentioned, the agility or like adapting into the scene locally. Maybe it's very different. So like I guess like what were some other company that you were also like using as a benchmark to like kind of like benchmark off this particular company, and how do you think about the risks associated with localization?
Yeah. So I've actually been investing globally in fintech for quite some time. And I think what got me comfortable with that was, as I think one of my earliest investments was leading a Series A in Chime in 2016. And I remember early days of Chime that, one of the things that I was most worried about was, that these international digital first banks would sort of come in to the US and eat our lunch, be it Revolut or Bonzo. And, now we're starting to see like that they're actually making a little bit of headway in the US. But I mean, I was worried about this, 8 years ago. And the reality was that like, most of these fintechs just don't travel well cross region, right? Like, you build a fintech in one location, and it's built around the local regulatory environment, the local consumer financial behavior. And so it occurred to me really early on that there was an opportunity to take the learnings that I'd had from my successful fintechs in the US, but like look for, sort of new and relevant models in other geographies. And I've had success in doing that. I've invested in other neobanks, as an example, in Latin America, like Klar and Clara, that have had a lot of success. And so that's always been something, or for a long time, been something I've been very comfortable with. But I think that, to me, it all stems from, I'm not going to go invest in a market that I've, in a technological market I've never invested in a region that I don't know, with people that I don't know, right? There has to be like strong interconnectivity between what I know and who I know that allows me to take kind of the geographic risk into a new place. And so in this case, as you said, I'd known Benji for some time, the networks were strong and overlapping, but also, fundamentally, this is a payments business, and it's one, that I know super well. Also, I mean, technically, they are based in the US, and the behavior is the cross-border payment from these markets, US and Europe, to Africa. So I felt grounded in the need and the gaps that exist for people here, and so the learning was a lot more as part of the diligence process about sort of the on-the-ground regulation and how much they built into the local financial system. But I think that the bottom line is, I found that it is quite feasible to take that sort of leap if there are enough of the other components of what makes the investment relevant that are known to me.
For sure. I feel like it's always so interesting to I guess like you mentioned, because of it's coming out of a specific network, as well as like you kind of also have to get comfortable with investing in different countries, and then you have a lot of experience and success in like thinking about fintech and thinking about fintech globally in general. And I wonder, maybe we could start like switching gear a little bit to talk about Acre. So like I feel like you have you built the firm with a few partners. And what about we start with like how do you think about building a different type of venture firm, and how was the approach, if the approach even shift be as like when you first started to nowadays?
Yeah. So we have I think, kind of an interesting founding story. So myself and my four co-founders actually worked together at a predecessor firm. And it wasn't like a big established multi-stage firm. It was in and of itself a startup firm. And, I think we were about two fund cycles into kind of building out that predecessor firm together. And I think, it just became pretty clear there was misalignment on the team in terms of sort of what we wanted to build from a sort of philosophical and values perspective. And we were too early as a firm to kind of have that. And so I think, so we, my co-founders and I decided to kind of to spin out and start Acrew. And, at the time, obviously, there was presented a number of challenges, but the reality is, like, I can't sort of emphasize enough how special and important of an experience that was for us, because basically what it meant was the five of us like went in eyes wide open. We'd all worked together before in venture. We knew we had a similar vision around what we wanted to build. We kind of knew each other's strengths and weaknesses. And we had a lot of learnings from the prior experience, and we made a very deliberate choice to do this together again. I mean, we could have easily parted ways and gone on to other firms, but we really were dedicated to having the opportunity to work together for a second time. And so I think that we, as a result, set up the firm a little bit differently. We are, for one, very values oriented as a firm. In fact, we spent 2 days in an offsite before we even started talking about investment strategy or fundraising strategy or anything else, just talking about like what we wanted our values to be. And and we have a pretty comprehensive set of values that have come out of that and are really core to how we build the firm, how we hire, how we think about decision making. And so that's really sort of inherent to I think who we are day to day. And then we also recognize that, as you've mentioned, that we have this strength, I think, around being very thesis driven. It's something that we did to a certain extent at our predecessor firm, but we really have emphasized it like in the organizational design even of how we've built out Acrew. So specifically we have like 3 dedicated thesis areas with dedicated teams around each one. And so we like to think of ourselves as having almost like 3 mini specialist firms within a larger firm that can compete with the best of the best specialists in our respective areas. But then we have the benefit of like some of the interdisciplinary thinking and collaboration. And so we've been very intentional about how we built that. And then the last thing was we wanted to emphasize kind of this community building orientation, this network orientation, or what we call kind of our extended crew. And so we built out a pretty unique executive network that has been instrumental in helping to, advise and guide our companies and acting as talent network. And really, this was because we wanted to be a boutique firm that where the investors on the team are the ones that really work with the companies, but fully acknowledge that in not having a huge platform team by design, there are going to be areas that we're not going to be the right people to help our companies on. And so we use this extended network or rely on this extended network of people who are experts and practicing experts to come in and help fill in the gaps. So that's kind of the the building blocks of how we've built the firm, and a lot of that is there's quite a bit of continuity around that today.
For sure. Shout out to Mark from your firm as well. He was our guest on Venture with Grace. So, okay, so I wonder, how do you think about, since like you mentioned about like, your firm within itself, there's like 3 different subcategory, and then you guys can compete with the best of the best in the industry. And how do you think about, I guess like portfolio construction, and since like I feel like different sector, the valuation as well as like the check size maybe like differ. And I wonder like how do you think about how to like I guess like allocate the attention or like capital into different subsectors as a
Yeah.
firm?
So this is like it's a really good question, and it's actually like a big part of this thesis work that we do, in the sense that like we recognize that at any given time, one of the areas that we invest in, the areas we invest in are fintech, data and security, which is what Mark spends all of his time on, and then digital health. And then at any given time, 1 or 2 of those areas may have a lot more in the way of interesting opportunities than another. There are natural tailwinds and headwinds that come up that are not necessarily consistent across all 3 of those sectors. And that's kind of by design in a way, because, it's a portfolio strategy. And so, if you think about what was doing well in 2022 and 2023. I mean, it certainly wasn't fintech, and I'll be the first person to admit that. Doesn't mean there weren't great companies that came out the other side, but the truth is, like, it was a rough time. On the other hand, because of geopolitical issues and other things, there was a lot of momentum around cybersecurity. And so, I think having the thesis orientation, having the 3 areas, and having a partnership, most importantly, that is, really oriented around kind of open communication, and I think, philosophically very driven by like the success of our crew, which is what's like in the name, right? We're not as territorial as a lot of other places, and we just want the firm to be successful. And so I think that enables us to say, hey, like let's put more emphasis on this category for right now, and we can put more of the firm resources into kind of helping to augment that side of things. Or now there are a lot of opportunities in digital health, like let's all get smart on that together. So there's a dynamism around it that I think really comes back to the thesis orientation and the core values around really emphasizing a more collaborative form of venture.
For sure. And I really like you call your like the firm's name is actually Acrew, like Acrew. And I wonder like how do you think about I guess like since we talk about the fund, and then why don't we talk about fintech, since like I feel like you are, obviously one of the top fintech investors. What are some new trends that you're seeing, I guess, in both AI as well as like the technology, that how it changed like the financial services industry? Maybe we could talk about like, how does the financial service industry move before the tech wave, and then maybe how AI or some other technology to kind of like accelerate the speed of how people interact with money in general.
Yeah. So let me start with kind of what I think has happened historically, and then we can jump
Hmm.
to sort of the go forward. So I think there's a lot of rhetoric over the last few years around, oh, like fintech got so frothy, is fintech dead? And, I just, there are a lot of people that invested in the space temporarily that, went another direction when things got hard. And look, I get it. Like it was tough for a few years there, but I think like I've maintained a very strong belief that there is so much more headroom in this sector. And the reason is because when I think about the companies, the really successful companies of this last kind of major cohort, and arguably kind of the first major cohort of fintechs that came about in the wake of the global financial crisis. I think that many of them were really about bringing existing financial products online, creating better digital interfaces, some technology kind of around those financial products, democratizing access perhaps. But because of how difficult it has been to actually reinvent the underlying financial infrastructure, these companies have been encumbered somewhat in their ability to like fundamentally change financial services from the ground up. And so, I think when you consider that, and you consider also like if you look at the like industry productivity on the basis of like one metric that I've looked at is like the GDP in the industry by employee in the industry, right? And you can imagine a lot of industries efficiency per employee in that industry has gone up meaningfully as a result of technology. But the truth is, in financial services, like it's been the efficiency gains have been minuscule to date. And the reason I think again is, a lot of the reasons that I've mentioned, which is just that like there's so much, we're still operating on, systems and software that were built like, the middle of the last century, and it just doesn't make any sense. So I think that this next wave will be one, in my opinion, for a bunch of reasons, but like about true reinvention, more from the ground up of financial services. I think the success of this last wave of fintechs has opened that door. I think AI is fundamentally opening that door as well. And so we're starting to see things that are really ambitious attempts at like something that is truly reimagined, and I'm really excited about it.
Speaking of AI, and you recently launched all in on AI, a financial service adoption index in partnership with Money 2020. Why don't we talk about like what are something that maybe you find surprising, or what are some like major trends that you're seeing from these like data?
Yeah. So as you said, we did this report, and what it looks at is we basically did a comprehensive scraping of the internet to pull every meaningful announcement, so publicly available announcement that scaled industry leaders in financial services and fintechs had made, basically between the launch of ChatGPT and when we released the report a few months back. And what we were trying to look at is to see like what are the industry leaders actually doing, and with AI, or at least what are they saying they're doing. And the reason that this mattered so much to us, and that it matters, I think, as an early stage investor, is because this technological shift is really fundamentally quite different, in my opinion, than technological shifts that we've seen in the past. So, when you think about cloud or you think about mobile, I think the opportunities for native entrants were pretty clear. Like cloud, there was an obvious advantage. If you were building on top, if you built from day one on top of the new infrastructure, you could just be more nimble, right? Like, and you could offer the benefits of cloud. You didn't have to do this major transition. Mobile, like if you were a mobile native player, like you could take advantage of, the unique characteristics of mobile in the fundamental service that you were offering, like geolocation or the ability to do true on-demand services. And so that was pretty apparent. But with AI, it's a little different. And the reason is because there are advantages that come from volume of data and existing processes that, are sort of highly repeated within an organization. And so I think that what we really wanted to better understand was, where is there room? Where will the native AI entrants win? And And the starting point was, okay, well, what are the industry leaders doing?
Mm-hmm.
And I think, I'll just kind of give a quick summation of what we saw about the industry leaders. And then if you want, we can talk about AI natives. But there were, so 76% leading financial institutions have announced a meaningful AI initiative in the last 2 years, essentially.
Mm-hmm.
And what was more surprising was over half of them have built AI into their core customer-facing product. And this did not include customer support. This is the product itself. We took out customer support, which is like so contrary to what people think when they think about financial services and AI. The common conception is that this industry is going to be a laggard in adopting new technology, and quite frankly has been historically, but that's not what's happening here. So there's a lot of rich data in this report, but I think one of the things that it really showcases is that financial services is very lean in on adopting AI and generative AI in particular. And so it's an exciting time.
For sure. I feel like there's a lot of like really interesting stats on here. Like, and I wonder, in terms of like, I guess like one thing I'm curious about, since like you mentioned about these, CFO software takes a cake. So I feel like a lot of fintech were directly selling to the CFOs. Can you maybe give us like a little like background information on like, how is CFO buying a piece of software, and then like how does like the sales cycle kind of look like in the past, and then for AI to take place to help I guess like helping companies or like banking platforms understand the transaction, I guess like which part of the automation should be happening as like an AI native way versus like what are things that like just like should never be touched because of there's so much, I guess, regulation or some other stuff that are like just super hard to move.
So you're right. So part of this report, we looked at which industries, like sub-industries within fintech, are leading the way in AI
Hmm.
adoption. And CFO software was kind of top of the pack.
Hmm.
Wall Street tech was up there too with regard to generative AI, but CFO was kind of number one. And then we also looked at like a leaderboard of companies to see which companies are leading the way. And so the reality was, you're right, like CFO software, there's a lot of representation. I think for probably obvious reasons, in that many of the other categories within fintech financial services, which we looked at, are like fundamentally financial products, like banking and lending and credit and insurance. Whereas CFO software by definition is software, right? So there's more of a surface area for
Hmm.
automation. And number two, as I think you said, you're not dealing with as complex of a regulated product, right? I mean, obviously, there is a high need for efficacy, so it doesn't. The stakes are still very high, but the sort of regulatory implications are much less. So I think for those two, I would say for those two reasons, the adoption there has been especially strong. And so when you think about like the CFO software companies specifically, 86% of them have AI in their customer facing product, not support related, again, product. And it's cool to see that like a lot of them are really starting to automate like core pieces of their customer facing workflow. So I'll give you an example. Sukhinder Singh Cassidy, who's the CEO of Xero, is also a venture advisor at Acrew, and we've done a lot of work with her on this in particular. And Xero was among the leading companies on the list. And they've done a lot around this AI assistant Jax that they've built into their product to actually, basically take over some of the core workflows that their products have done and historically. And that's cool because, I would say a lot of companies tend to be hesitant to, they use AI to sort of supplement, but not actually reinvent the core product. But in this case, like, a lot of the sort of workflow around SMB invoicing for those that want to do it through a chat interface is happening on AI. And so they're really moving, piece by piece, but, meaningful portion of that product experience to a more agentic type interface with more automation on the background on the back end. So so that's one example, but I would say that category has seen a great deal of activity.
Super interesting. And
maybe we jump into the AI native department. So like I think you mentioned about like generative AI enable fraud detection. And I feel like this category, there's just like so many companies that can, like I feel like the voice and then the video. So basically right now, also like the different type of like authentication on people, that's like definitely one of the really interesting categories. And then you mentioned about like payments infrastructure for AI agent, personalized wealth management. I guess like to think about these like subcategories, like what would you say are things that you feel like would be most like rewarding in terms of like, building a startup in the space? Because I think like whenever obviously I feel like also like you're very bullish on, I guess, like the consumer fintech category. I can think of many companies in the personalized wealth management that are doing, personalized finance related adaptations. And I wonder what are something that in the AI native space that you are most excited about?
Yeah. So I think that what all of this work helped us sort of crystallize is the following. I mean, I think, look, there are going to be a lot of AI,
Mhm,
amazing AI native companies built in fintech and clearly more broadly. But I think that like the two sort of large categories in which I
mhm,
think there's meaningful opportunity right now in AI native sort of applications of financial services are one, categories where there's like an opportunity for fundamental reimagination. So like really kind of changing the product offering, the business model, like the way in which the sort of financial product operates.
mhm,
So there's the fundamental reimagination bucket,
mhm,
and then there are, I think, solutions that are oriented towards solving problems that are actually created by AI, right? And so I think that both of those buckets are areas where, in my opinion, scaled fintechs and industry-leading financial services companies are less likely to sort of be the ones who win. So an
mhm,
example in each would be fundamental reimagination. You sort of mentioned it, but I think that there is going to be a whole new sort of wave of payment infrastructure
mhm,
around how agents pay. I mean, and it's almost hard to conceptualize right now, but I think that in the not too distant future, a significant
mhm,
portion of e-commerce payments will be at least partially driven by an agentic flow. And so in order to do that, we're going to require sort of new capabilities around the infrastructure to
mhm,
transact, the trust networks, the compliance infrastructure. And so I've been thinking a lot about that as like a category for reinvention, among others. And then in terms of like the bucket of what are the problems that are actually the new problems that are created as a result of AI, actually fraud is a big one. I mean, I think that it's, clearly there have been many, fraud detection sort of software
mhm,
applications that have existed, with every meaningful wave of the internet. But the reality is that this wave of technological innovation is significantly increasing fraud at a rate that we've never seen before. I mean, you think about the fact that deep fake frauds alone
mhm,
were
mhm,
up 700% year over year. I mean, that's scary. Like the malicious actors on the other side are using this technology uh, to be more sophisticated and more scalable about their fraudulent attempts. And so, I hate to say it, but I think it's going to be kind of an all-out arms race. And the companies that are going to win are going to be
mhm,
super agile, back to that agility word, right? Like,
mhm.
and figure out how to keep up with the pace of innovation. And so I'm less inclined to think that's going to come from an incumbent. So those are a couple examples.
For sure. I wonder since like I feel like you you created this report with Money 2020. I wonder how do you kind of like shape your own personal intake on the fintech space since I feel like you've been following the space for a long time and obviously you are an expert. And I guess like what's your content diet look like for yourself? And I guess also, is there any like really interesting concept in the fintech space that you find actually surprising or, like most people who don't understand fintech, whenever you think about fintech, we think about, your portfolio company like a Plaid and stuff like that. But like, is there something that you find very surprising in the past, like I guess like few months that you find in the fintech startup space?
So I guess maybe I would like actually take a step backward and say, when I started out in fintech, I'd done this very early thesis work, and it really was around, I had a strong belief that there was going to be this opportunity for consumer-facing digital-first financial products. And when I did that work, I was really looking at demographic shifts, I was looking at technology shifts, and I was looking at macroeconomic shifts, because all of those things have a huge impact on sort of how financial services operates at any given moment in time, right? And so at that time, in the early 2010s, right, we were, from a macroeconomic perspective, we were coming out of the global financial crisis, and people were, consumers were inherently scarred and distrustful of legacy financial institutions as a result of what had happened. We're going through a major technological shift. Mobile was becoming ubiquitous for the first time, and then we were also going through a major demographic shift, because millennials were coming of age and entering the workforce, and were sort of the first quasi-digital native generation. And so, all of those things together like led me to believe, at a time when a lot of other people quite candidly didn't, which is sort of funny to say now, but that like this demographic would adopt, like a branchless bank, for example. And it's what gave me the conviction to lead, Series A and Chime back in 2016 when others wouldn't. And so that kind of like framework of thinking has continued to guide, the way that I approach, investing in fintech and in other categories as I do occasionally, but like through all of these cycles. And what's interesting now, and you mentioned consumer, which we haven't talked about much, but like I actually think this is an incredible time to be building consumer fintech. And the reason is because if you think back to what I just said about like sort of the three fundamental shifts that led not only the sort of foundation for Chime, but for that whole cohort of like meaningful B2C and B2B2C companies that came about in that time period, I think we're going through something very similar right now. There are direct parallels. So if you look at, macroeconomic volatility that we've experienced, however you want to characterize it, but certainly inflation and, interest rates being what they are, and, some of the sort of political reality has had a significant impact on how people think about their financing. One. Two, we're going through a major technological shift again with AI, probably the most significant that I've seen in my lifetime, certainly as a professional. And then three, you have Gen Zers sort of coming of age and entering the workforce and setting up their personal financial stacks. And these are like the first true generation of real like digital natives from day one. And they have a different set of priorities and, needs and, expectations of personalization and other things. And so the combination, again, I think is like there are meaningful enough shifts that I think there is a opportunity for a next wave that's even more significant than the last one. And I'm really excited about investing behind that.
Amazing. Okay, so I want to be mindful of the time. I don't know if you have like a minute or so. Like, maybe we would do like a quick 1 minute fire round. So, number one, who made the biggest impact in your career?
I mean, I would think it's hard not to say Teresa, to be honest. I mean, I think that ultimately she was a friend and mentor, and then became my, and then I worked for her, and then and now she's my co-founder and co-managing partner. So for sure, she's been sort of the most important constant professional.
Where can we find you outside work?
Hanging out with my daughters, playing games outside with them. Yeah, I mean, I think that right now at this stage in my life, I've got like my two babies, my building my firm, and I've got my actual babies. And yeah, Bailey and Sierra are kind of my joy right now, and I'm getting to kind of experience the world again for a first time through their eyes. And so there's not a lot I'd rather be doing with my time.
Amazing. Well, Lauren, thank you so much for coming on the show today. It was such a fun conversation.
Thank you for having me, Grace. Appreciate you inviting me, and for all of your thoughtful questions on this one and on all of your shows. So thank you.
Thank you.
Thanks for tuning into Smart Venture Podcast. If you learned something from the episode or even just mildly tolerated me, please subscribe and leave a 5-star rating. I promise I will keep bringing you more successful, insightful interviews and insider tips about startups. Remember, sharing is caring. So tell your friends to listen too, or enemies, I won't judge. Until next time, keep venturing smartly.